Good morning. This is Larry Edelson for my Uncommon Wisdom video market update for Thursday, November 3rd. Most people seem to think that the midterm elections were critical for the future of the economy, but truth be told, the results of the elections were pretty much known by the markets and digested by the markets in the couple of weeks leading up to the elections. What wasn't known was the fact that the Federal Reserve is seizing upon gridlock in Washington to really take control of the economy. Federal Reserve and Bernanke feel the onus of responsibility now for the economy going forward, given the fact that there'll be more fiscal conservatism in Washington, will fall on the Federal Reserve's shoulders. This is something I have been warning you about all along. It is not going to stop the Fed from printing money. It is going to do exactly the opposite and encourage the Federal Reserve to print even more money going forward. They will not be able to rely on Congress for any kind of bailouts or stimulus programs. Having said that, let's go right to the gold chart. The past few days, we have seen some consolidation in gold, just as I expected and I indicated to you in my last update. The very good positive thing that I like to see here is gold has held support from this rising uptrend line here. I consider that excellent for gold. There's a good chance now that we will come up to resistance at the 1376 level, and if we can get above that, then I have no doubt that we will see further new highs in gold. On the other hand, I wouldn't be surprised for gold to continue to trade a little bit sideways in here and digest the events of the elections and particularly the Federal Reserve meeting and actions in the days and the next week or so following the elections. There is still a third possibility that gold will not hold support. It will drift lower again and take out this support area here, in which case I would look for a move down to about 1260. But even then, you know, gold is in a very important, very strong long-term bull market, so I'm not phased at all on my long-term positions. I'm still expecting $2,300 gold at a minimum. In the short term, a little bit, foggy, but if you're following any of my trading services, certainly stay tuned to them for my next recommendations. Let's now take a look at the dollar. The dollar is not acting very well. You can see here on this chart, if the dollar index were at least partially strong, you'd expect it to rally from this point here where we came back above support up to that 80 level that I indicated last week, right around here. However, it's not even been able to do that. And again, it's sliding back down here towards support. Now, this is largely because the entire world now knows what I've been telling you, that the Federal Reserve is going to take upon itself the onus for not only the U.S. economy but the global economy, and actively and proactively on their part look to cheapen the U.S. dollar and devalue the U.S. dollar. So the dollar remains fundamentally and technically and cyclically in a very steep long-term bear market. The only question over the next few days is, will it hold support here and try to bounce again, or will it break support here and start plunging anew? We should know very soon, and I will keep you posted there. Let's also take a look at the Dow Industrials. Get this chart up here for you. This is the chart I've been showing you for the last couple of weeks. This formation here back in August, I said was very similar to the formation that occurred at the end of middle end of October here, leading into the elections. It did lead to a spike up to just over 11. Well, the high was 11,247. My resistance key resistance that I've told you about in my Uncommon Wisdom columns is 11,256. So far, the market has tested that area on two occasions here, right here and here. It has been unable to close above it. However, if we do close above 11,256, we could be in for another surprising rally in the Dow. I still maintain that cyclically the Dow is headed lower, and I have no doubt that we will see a move lower, perhaps not until next year if we get a close above 11,256 in the short term. So these cycles can invert in the stock market. Inversions are usually occur when there is government manipulation of the markets, and we certainly have that going on with the Federal Reserve printing money and devaluing the dollar. It is significant short-term, but it's also significant long-term. This entire move out of the March 2009 lows in the Dow Industrials, the crash low back in March of 2009, part of it was due to the market being simply oversold, but part of it was because the expectation that the dollar is headed lower long-term. Stocks can act as an inflation hedge, so to speak, against a weakening dollar, just like gold can. So long-term, I am still bullish on the Dow Industrials, and I would not be surprised to see a big move up going into late 2011, 2012 in the Dow. That does not mean it will be making progress in real terms, because the dollar would be continuing to sink. However, in nominal terms, we could see the Dow move up, and in terms of real net values, based on the sliding dollar, it would be no net increase in real terms. In fact, if you hearken back a few weeks ago to the Federal Reserve's major statement, Ben Bernanke's major statement at the Boston Federal Reserve, that they were going to begin targeting inflation, to raise inflation, to help avoid deflation, and to raise asset prices, one of the statements he said was that he would be targeting a nominal increase in GNP or GDP. That means pushing up asset prices, even though he knows fully well that the dollar would be suffering and losing purchasing power because of his money printing. So that means in nominal index numbers alone, the Dow could go higher, but in terms of what it really means to your total net worth if you're invested in the stock market, and in terms of real asset values, it would mean essentially nothing. That's why I continue to favor tangible natural assets and natural resources over the Dow, even though I am longer-term bullish on the Dow. I expect real assets, tangible assets, to outperform even a bullish Dow going forward. Till next week, this is Larry. Have a good weekend.